Hello and welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is September 1st, 2023, and it is time for a gold price and gold miners update. This is going to be a big one because the opportunity that is in front of us right now, if you really step back and take a look at it, is quite significant with respect to gold. So let us look at that. Make sure to subscribe to this channel and hit the bell icon to be notified when these videos come out, or else you will not see them in time for them to be actionable. The other thing that you should do is subscribe to our free Twitter feed, where I sometimes post quicker updates in between these videos for you. Thank you for your attention to that. Let us look at the gold update as we look at the disclaimer here for one moment. Okay. Now, what we're talking about here with gold going back over the last 3 years is a breakout scenario that should be on our hands within the next 6 to 12 months, and it's gearing up for that. This is looking pretty good. So let's go through it here. You can very clearly see the all-time high resistance zone. There have been 1, 2, 3 attempts, all matching within about $40 here. These are the all-time highs for gold. And so then we look at the fact that gold now, from the most recent attempt, number 3, is bumping up against, right now as we are speaking, bumping up against the downward trend, going back from the most recent peak, the most recent attempt to break to new all-time highs. So in my opinion, what is going to happen here, if it doesn't happen this week, within the next several weeks, what's going to happen here is gold is finally going to break this downtrend, and then it won't immediately zoom back to the all-time high resistance zone, but there'll be a little process, a little back off, a retest or so, and make sure you don't get caught on that. A lot of people will lose their position here, but that retest should hold. And as we round out into the later part of the year, perhaps extending into the beginning of 2024, if the break of this downtrend can solidify here within the next couple of weeks, gold should be ready for the big one, And this will be the break to new all-time high record prices for physical gold. I've made the point before that markets tend to not break out on their third attempts. The third attempt was made about 4 months ago. So we've had 1, 2, 3 major attempts. And now we're getting ready to break the downtrend from that attempt. And so what we'll be setting up is attempt number 4. And whether this happens a little sooner than I'm expecting, or whether it takes a few more months and maybe this is in the first part of 2024, really I'm focused on the fact that we've got this overall sideways consolidation here for gold that is now bumping up against the only downtrend resistance before we make lucky attempt number 4. And I think number 4 is going to be successful. All right, so this looks pretty good here for gold, whether it's sooner than I expect or a little bit later than I expect. And then if you're an individual investor, you really want to take a step back and think about, how do you want to play this right now? And of course, there's a huge difference. We have some investors who come to us with tens of millions of dollars, and they're looking to diversify a portion of that and take a physical gold position only. There are considerations with that. Then we have investors that are just starting, and they're saying, look, I want to try to hit a home run here. I don't have $10 million, but I have $1,000 or $10,000, and I want to try to make that a multiple of that amount. So here is where this analysis comes to you for your attention to try to change your position in life. So if we look at the fact that gold is down only 6%, as things stand right now, only 6% from the all-time high, we can look at some ways that you can achieve leverage. If this analysis is going to be correct and gold is bumping up against the resistance here, and sooner or later it is going to break to new all-time highs, we can look at achieving leverage to this move based on the fact that with gold down only 6% from its all-time high, the gold miners who are digging this very product out of the ground are actually down 33% from their related peak. And so if the gold miners are going to get back to that same related peak, plus or minus within the same window of time that gold does so, the miners will need to rise by 50%. This is for the senior gold miners. This is just the math. When something falls by 33%, it takes a 50% gain to get it back to that previous level. And of course, this is just talking about getting back to the all-time high resistance zone, which gold is only 6% away from right now as we're speaking. So the miners have underperformed gold here as gold has consolidated, but the possibility here is for them to outperform in the catch-up. And let's think about this for a moment, why this type of behavior happens. If you think about what has been going on here for gold, even though the chart looks quite constructive, basically investors have grown frustrated. It's been 3 years where as a net sum, we've had gold go up, down, and back now in the middle. So as a net sum, gold is flat. And what's happened here is the gold miners have grown impatient. The investors in the gold miners have grown impatient. They've said, oh, maybe this is going to go on for another year. Maybe it's going to go on for another 2 years. In that case, the investors who are looking for leverage have grown impatient, and they have sold down the underlying companies that are digging this very product out of the ground. They have sold off the valuations of these miners irrationally based on the current gold price. You can see the current gold price right here. You can see the price action in the gold miners. And so for investors who are new to this sector and who have time at their benefit, you can use this irrational selling in the gold miners to your advantage. If you're looking at physical gold and you're saying, well, look, maybe I already have enough physical gold. I want to try to really change my possibilities in life. A 6% gain in physical gold is not going to do it, but you start to talk about a 50% gain, things start to look a little bit interesting, don't they? All right. So sometimes we can take the irrational market behavior and use it to our advantage. Let's think about taking this theme a little bit further here. Let's switch it over. I have kept the gold chart exactly the same as it just was. The only thing that I have done here is change out the bottom portion, exactly the same time scale here. The only thing I've done is I've changed it to a different ETF, a different fund. Now we're looking at the junior gold miners. These are the small cap gold miners. And what tends to happen is that when the large cap gold miners or the seniors, when those investors get frustrated, the junior gold miner investors get even more frustrated because these investors are looking to hit a home run and they're looking to do it quickly. So when gold moves sideways here, or gold is down only 6% from its all-time high, what we see in the junior gold miners is that they are down by 45%. Can you believe this? So think about this for a moment. If you're a new investor in this sector, and if we are right here on gold, and gold makes a new all-time high plus or minus within the next 6 to 12 months, the mathematics dictate that if something has fallen by 45%, that it will then need to rise by 83% just to get back to its former peak level. Let alone, what if gold makes a new all-time high, in which case we'll be going above this figure for the junior gold miners. Okay, you start to get into some possibilities here. I mean, because look, if gold rises by 6%, that'll be nice, but no one is really going to be changing their possibilities in life with a 6% gain. But you start looking at some of the gains like this, and you start to get into some interesting scenarios. Okay, so let's say you understand this, but then you say, I really want to try to use this to my advantage to hit a home run, to change my possibilities in life. Then you look at the exact same gold chart on the top, which is only down 6% from its all-time high, as we've said, and you look at the valuations of a company like Gold Miner X. And this is a company that has 4.7 million ounces of gold in the ground in politically safe Canada with zero debt. And this is a company that, as gold is only down 6%, is down 75% because those investors have grown so frustrated. We've been looking at the thesis here of, you look at the large caps and those investors have grown a little bit frustrated, and then the juniors, and they've grown even more frustrated. And then you look at individual companies like this, which I will not give away for free. This is reserved for our premium subscribers, because if you do the math on a company that has been irrationally sold down 75% amidst that 6% decline in gold, the math dictates that to get back to that former level, the company would rise by 300%. And this, in fact, is what I expect from Gold Miner X, based on the fact that I know the management personally, based on the fact that I have studied this company for over 10 years, based on the fact that I know that there is no change in the company from this point to this point, other than they have improved the operations. They have published new feasibility studies and pre-feasibility studies on this deposit to prove the ounces of gold in the ground, and they have done further drilling. So it is actually a better company now than it was back there, but the market has irrationally sold it down to this level, which for new investors, if we are right on gold, gives us this home run, life-changing possibility. So if you're with me on this and you see the gold chart and you say, wow, you know what, that thing really could break out here within the next 6 to 12 months, here is the executive summary for you. Gold is only down 6% from its all-time high peak. That is nothing. That could be achieved in 2 weeks. Gold mining investors have grown impatient during this time and thus have irrationally sold their investments, as gold has merely consolidated in a sideways fashion. Technical analysis suggests that gold may reach a new all-time high late this year or into 2024. And if it does, the simple math expects that gold will be higher by 6%. Okay, not bad. The senior gold miners will be higher by 50%. The junior gold miners will be higher by 83% because those mining investors have grown impatient. But if we go all the way down to the companies that are individual that we are studying here, you can find companies that we would expect to rise by 300% in this same period of time. So think about this for yourself. For some investors, it makes sense to be all in the physical bullion, because I do think bullion is going to make a new all-time high later this year or early 2024. But for some investors, it makes sense to consider the higher leverage forms of investment if your situation warrants, and if you're really looking at this and saying, I want to try to do something new with my life in 2024, well, there are your opportunities. If you would like to follow with Gold Mining X, it is a company that our subscribers are invested in and that we update when the research comes out every single week. You can find that company and the other companies that we are invested in Precious Metals Intelligence Plus. We produce weekly videos just like you were seeing right here, except they are much more in depth. Not only do we cover the companies that we are investing in, including gold miner X, but the rest of the gold mining sector, we also cover silver, we cover Bitcoin, the US stock market, the rest of the commodities, and the currency markets. And this includes not only the companies that we are buying, but also when we are going to sell those companies, because it's not enough to just know when we're buying it. How about when we're going to sell it in the future? Think about that and what you could possibly make if that company, in fact, goes back to its recent peak with gold. If you would like to take this to the next level, you should understand that although the gains we've just talked about seem fantastic, and they are, you can achieve nearly twice the amount of profit if you make those exact same investments but via private placements. And so we do offer this service for higher net worth investors. The minimum investment is typically $10,000 Canadian. So you have to be able to invest that amount into these companies. But if you can do that, you get even more upside than the open market purchases because you receive free warrants. And the warrants get you nearly twice the upside compared to buying those exact same companies in the open market, which I think are going to do phenomenally when gold breaks out to new all-time highs. So consider joining us for elite private placements if you are in the higher net worth category. It will be well worth your time to learn about the warrant scenario here. If you'd like to sit down with myself, Christopher Aaron, and discuss these possibilities, discuss investing in gold miner X, and discuss how that could play a part in your portfolio, know that you can reach me on the consultations tab on the website. I sit down with individuals just like you. We sit down like this. We schedule either 30 minutes or 60 minutes on the phone or by Skype, and we discuss your situation. We discuss the research behind these choices and how you could best apply this to your investment portfolio. Basically, it's what I would do if I were you. Exactly the moves that I would make, and so you can apply that to your investment portfolio. Thank you for tuning in this week. We will look at the US dollar. We will look at silver. We will look at the bond market over the coming weeks. Make sure you have hit the subscribe button, and then think about the scenario. If gold rises just 6% to get back to its all-time high, think about what those relative gains could be in the different components of the gold mining sector.